Alt season isn't a myth, it's a cycle, and the signs are saying it's coming soon. In this episode, I'll show you why the next leg up starts in mid-June, and why Bitcoin dominance peaking doesn't end the game, and why we're only just beginning the mania phase. Hello and welcome back to Prodigal Son Crypto. In this episode, we're going to be looking at a lot of charts showing you why alt season hasn't come yet, and it is coming, despite what all the naysayers are saying. There's plenty more in the tank for this cycle. You just don't know what's coming yet. It's going to be insane. We're going to go through a lot of charts today. We're going to show things like Bitcoin dominance, DXY, the total crypto charts, total free, others. We're going to go through economic factors, just cyclical things that show us that this cycle has got plenty more in the tank. So here we go. Right, so it's going to be quite a laid-back show today. I'm not looking to do too much editing because I've got a lot of content to get through, and I just want to show you guys loads of charts, and we'll get through it. Okay, so I hope you enjoy the show, and let's go. I was looking at this first. So this is the BTC market cycle bottom return of investment. And the reason I'm showing you this is to show you that we're roughly now around 950 days into the cycle. But if you look at previous cycles, like more recent ones, like the 2017 and 2021 cycle, they both led up to around 1,000. About 1,050 days, basically. Whereas you can see the earlier cycles were shorter. We tend not to count market cycle 1 and 2 because they were just so volatile. So if we look at the last two cycles, we can see we've got time left. This is what the reason for showing this chart is. Show we have time. Every cycle is different. Every cycle has its different patterns. We was tracking it pretty well with 2017 up till I think that was around March time, and then we've started to stray off lower. And this is what's disheartening people, because they think that because Bitcoin or even altcoins haven't performed as well as other cycles by this time of the cycle, that it's not going to play out and give the same rewards or gains as people have seen in other cycles. So this is leading to a lot of disheartenment, a lot of doubt. There's obviously been a lot of FUD in the market with the tariffs going on, with geopolitical events going on. But I strongly believe in cycles. I believe in a few different cycle theories. You've got the business cycle. You've got the Bitcoin halving cycle, the presidential election cycle. All of those three roll on the 4-year cycle, and they all sync with each other. And then you've got some other cycles like the real estate cycle, the 18.6-year cycle, that is. And then I've got some other cycles I follow as well. But like I say, cyclically, the timing would say we've got till the end of the year to do this, but nevertheless, it could go on into early next year. We don't know. Look, what I will be doing is, as soon as I start seeing the signs that we are in a euphoric stage of the cycle, that Bitcoin dominance is falling, all of those signs that retail are here and buying, I want to be selling my bags to new retail, obviously, and that's what I'm going to show you guys how to do. So yeah, like I say, plenty of time left in the cycle. That's one factor. Secondly, so this is the total historic risk levels for total market cap of crypto. As you can see, at very heated stages of previous cycles, it's got into the red here. In every cycle, red indicates tops. I don't see any red there for total crypto, and you can make all the excuses for that or reasoning for that. There's too many altcoins and, blah, blah, blah. But I would expect us to see us getting into this overheated level. I believe all stages of cycles are cyclical, meaning you've got the bear and the bull to break it down into two halves, and then you've got these seasons. You know, you've got your winter, your summer, your spring, and I believe that you will always tend to get to this euphoric stage. I believe there needs to be like a euphoric build up before you get a breakdown and collapse, and just, you know, you can have many cycles within cycles as well. You know, this can go on multi-month cycles or multi-year cycles, but what we are looking at is a multi-year cycle, and I don't believe it ends without it getting to that euphoric, lots of new retail excitement stage. And some would say, well, what about meme season or around the elections? Yeah, it was looking like it was going to go that way, but it didn't. It didn't. You know, all that we saw was a number of meme coins got a lot of exposure, a lot of attention, some big gainers, but I believe a lot of that was old money within the crypto ecosystem sloshing around. Now, you've got the BTC Pi cycle top indicator. I don't know if you've heard about this one. Quite a reliable indicator here. So what happens is when the red line crosses the green line, yeah, and then the price has gone above the green line, and then when it crosses back down, that tends to be your tops. Yeah, you can see it was quite clearly the tops. Yeah, so where the red's tipped back down under the green, it's topped. That was too early to call that one, but here, look, green's gone above red. That was a top. Green's gone above red. That's a top. Green gone above red. That's a top. Green gone above red. That's a top. Red's still down very low here. I can zoom that in for you. Hold on. Look, we've got a long way to go there. And that green line at the moment, by the way, and bearing in mind that price usually extends over the green line, the green line is currently sitting at $163,000. So yeah, could we get above there? Could do. So I'm showing Bitcoin. This is mainly about altcoins, this show, because I want to just demonstrate how alt season is likely to still be coming. You never know for sure, obviously, not financial advice. But, you know, this is what I'm looking at, and that's what I'm just trying to do. I'm just trying to share what I'm looking at, because I spend a lot of time looking at charts, understanding the markets. I spent the whole of the bear market of 2022, 2023 learning where I went wrong in 2021. Don't get me wrong, I made some money, but I also started piling in a lot of money at the wrong times as well. And I spent that time studying market cycles, studying technical analysis, economics, and everything like that, just so that I could know where I am to not make those mistakes this time round. And I've learned a lot, and I believe what I've learned is telling me that this is continuing, and I'm going to keep moving on. Got a lot to get through here. So, Bitcoin historic risk levels. So, this has been quite good at indicating tops. You see, the risk levels get very, very high at tops. Yeah, and you could say, well, that got really high there, but no. What I am saying is that's a mid-cycle top. So that was like the March 2024 high. Yeah, even though we went higher, yeah, in price, like late 24, early 25, the risk levels didn't get higher again. Now, what you'll see from previous cycles here is, like, look back here, 2012, 2013 cycle, you had a mid-cycle top in risk level with price, and then you had higher levels. Yeah, you had a double top there, in fact, in risk level highs. Yeah, in 2017, you had the mid-cycle top here around 2016. Summer of 2016. It went down again, and then it come up for final top on the risk levels with price. Then in 2019, sorry, I believe this was 2019 June again, roughly June. And you had a mid-cycle top with price. Then it's come down, made a low again, and then it's gone up again, and it's made a final top with price, even though price went slightly higher afterwards. Yeah. Then we look to where we are now. We've had a 2024, I believe, was a mid-cycle top in historic level and price, and we are yet to come back up. And you can say that's lower highs. Well, you could also say that's a lower higher low as well. So yeah, could that go back up? And we could see this extend out into later this year or early next year as a top. I'd lean more towards like a Q4 top, because Q4 is quite commonly a top period. So yeah, plenty of time for that to run up more and make a significant high like those before. Looking at Bitcoin itself, this is my diagonal levels. You can see that Bitcoin likes to range within like these diagonal ranges. Yeah, it will hold them. It will act as resistance. It will break through, drop through, pass through, and carry on up to new levels and everything like that. And I'm using this with a mixture of the bull market support band. And as we can see, these historic lines go back to, I'm going back to some of these back to 2017. Yeah. And you can see the price reacts around them quite well. Don't get me wrong. It does break through them. It does fake out. It does sometimes sit on them and hold them like here. But what I find them to use them like, I'm not using them as entries or exits. I'm not a day trader, so that's irrelevant to me. What I like to do is look at price behavior more than reactions to certain numbers or prices. And here we can see, look, it bottomed here like it did in 2019 and 2020, and if you look at like 2020 as well, it held it like to the wicks coming down, but the closes, it's the weekly candle closes that I tend to do this more on. Don't get me wrong, there are some points where I have wick reactions as well, but as you can see, we're like a couple of levels up now from the low, and the bull market support band, if I zoom in closely for you, is just turning green again, which means there could be another swing upwards, because usually when it turns green, there's a swing up, and look there. And when you're in a bull market anyway, for instance, like sometimes here, whether it's like going back to 2020, the green uptick, swing, then it goes negative slightly, then it goes back, and then you can get a huge swing like that. I'm not sure if that's coming, but even like the mid 2021 summer lull that we got, when it ticked green again, we got another upswing. So it looks like it's ticking green again, which is positive. And if it was to go up to the bar, which it's it's been at a couple of times, this one here, you could be looking at like by July around 130k, yeah. And then if it was to go up further, like maybe later on into the year, you could be looking at 195 k, just under 200k. Now to the bearish side of that, if it was to come back down to this line again, which it's held as resistance support for a long time. That goes back also to here. Look, it goes back to 2020, goes back to earlier than that, goes back all the way to the 2017 cycle. If it was to come back down and hold that bar again, which is totally reasonable, you'd be looking at 85k, So, and the reason I got these here is because I want to know, if this is turning sour and this ain't looking like it's happening, then these are good areas for me to say, maybe I should take a little bit of risk off the table here. It's not looking like it's going too well at the moment. But, as we're holding above that, I was quite happy, even through this correction. I was watching it here. I saw it drop down out from this bar, and then I had this bar drawn here. And I knew that if it held there, it'd be fine. And it literally only wicked down to it. And then I was sitting there, I was going, as long as we're above here, we're cool. And then we got above, managed to struggle back above it again and hit the top of that one again. So yeah, so there's some levels to watch for Bitcoin. This is just to show that Bitcoin's healthy. And if Bitcoin's healthy, Altseason is still in the pipeline, yeah? And that's besides the point of, like, you've got like big investment coming into altcoins. You've got the stablecoin bill being passed. You've got like coins like Sui and Solana doing fantastic things. There's so many of them doing fantastic things. You're even seeing a lot of interest in Ethereum as well. So, and we're going to get to Ethereum. But I don't know if you've all been following Global M2, but it's tracking it really well. It's tracking it well, and even this it's quite comical actually, because if you zoom out on Global M2 indicator on the Bitcoin chart, which maybe I'll bring up in a little while. But I just wanted to show this screenshot because Quinton here says, I don't think this is a coincidence. No, I don't either. But I'm not going to say that we're going to follow M2 forever. We are not. Because if you zoom out on the indicator, the price action follows it very closely for short periods of time. And then I think it's got something like an 80% correlation. But if you look now, the M2 dipped, and if you track it with I think it's like an 10-week lead, yeah. I found recently like 78-day lead is more accurate, but it's taken a dip, and the price has taken a dip, and if it follows it again, the price, the M2 says that Bitcoin will be heading up again by mid-June. And like I say, in bull markets, yeah, you tend to get like upswings of multiple weeks. We had a 7-week upswing, and now we're having a couple of weeks down, and that's if you believe you're in a bull market, then the chances are we're going to go and break the all-time highs again. In a short period, it's not going to take. We've had this is the thing. A lot of people have got PTSD because a lot of the long downturns we've been in, lots of sideways action for months, and I think time price pulls back now, everyone's like, this is going to go on for months, and that's not necessarily true. As we start heading towards the end of a bull market, those corrections can become shorter, faster, and more volatile, so yeah, I think there is a good chance we could be moving up by mid-June. And if you look at if anyone's been following gold, gold's obviously been on a tear this year, for the last year or two. And what this diagram here is showing, so this is the market here saying silver just broke to decade highs on the weekly. Upside skew is exploding, call spreads getting loaded, AI demand, gold catch up, and gamma fuel. This could get wild. And yeah, I believe that silver, look, if gold's made this similar type of climb, broken its all-time highs a while ago, now if people were speculating in precious metals, and they've had a run like that in gold, and they're looking at a chart like this of silver, then it looks like the flows are going to silver, and there's other fundamental reasons for that, but I believe it's speculation at the at a high level. It's just speculation that people who traded gold, who've been in the gold trade for a while, it looks like gold might top soon. Either it's topped or it's about to top, and then I think when gold corrects, the flows go into risk assets, and silver is seen as the riskier asset of gold, and I believe that leads us on to the stock market. Now, we've got the S&P 500 here. It's so close to all-time highs. I mean, let's measure that up, right? So from where we are now to all-time highs, you're about 3% from all-time highs. So you've still got a lot of bears calling the lower high, and that's entirely possible. But I believe the stage we're at in the cycle, with what's going on fundamentally and what's going on economically and geopolitically, I believe that the S&P is going to break its all-time high. And then we could look at the Nasdaq. Yeah, Nasdaq also very close to all-time highs, and I believe the Nasdaq's even more relevant at this stage because we are in a technology super cycle, and where we've got AI. It started, with internet and everything like that. This is a longer, bigger cycle, like a 30-year cycle. But tech is developing into AI now, and all the big tech firms are going for that. And yeah, I mean, look, still like, what's that, 2.5% from all-time highs for the Nasdaq? Come on, you look at this as well. I don't know if you saw that on the S&P 500 as well. It looks like it's starting to tick green again. We've been through this big, heavy dip, and to recover a dip like this in the stock market, I mean, if you look back at history, I mean, when it recovers dips like that, it could go on a tear like that, So similar thing from the S&P to the Nasdaq. And then you've got the Russell 2000. So the Russell 2000 is the top. So you've got S&P 500, top 500 stocks in the US, Nasdaq 100, top 100 tech stocks in the US, and the Russell 2000 is the top 2,000 stocks in the US. And so it gives you a broader range of lower cap stocks, basically. And it does tend to lag the stock market. The stock market is your bigger cap. Imagine in crypto, you've got your big caps. You've got your, Solana, Ethereum, and Bitcoin. And in the stock market, you've got your big caps like Amazon, Apple, Microsoft, all of that stuff. And people invest in big market cap investments first of all, because they believe them to be a safe, sure investment. Then when people start to make money in bigger cap investments, then they start to speculate more. And that's a lot about what I'm trying to just get across today, is about the speculation will come. And I believe that the Russell 2000, which is more speculative stocks, is going to run. Now, it's taken a harder correction. It's got a lot more to go to get back up to the all-time high. It's actually around about 17% there, and it didn't really make a significant high in this cycle. I mean, look at all of these. See all these blue lines here. They're like presidential election dates, yeah. And you can see, apart from 2008, where it fell down dramatically, there's been often a climb. After the elections, yeah, climb after the election, climb after the election, climb after the election. And then this one kind of topped around the election. So I do believe it could climb into the later part of this year. So if low cap stocks have still got the opportunity to run, if silver's still got the opportunity to run, then we're talking about speculation here, and altcoins can run as well. And looking at the VIX, I mean, the VIX, the volatility index for the stock market, it spiked higher at some of our recent lows. Yeah, as high as it had been since COVID. Obviously, COVID went higher. As high as it had been since the collapse of 2018. 2015. It's had those highs. Yeah. And those highs are usually quite spaced out. And these highs mean lows for markets, yeah? And we've had them. And we've got a little space now, I think. I think to say that we was going to get another one really soon, it's possible. It is possible. I see that we've got some bullish conditions for the rest of this year. And that takes us over to Ethereum. Ethereum, it's been a sad story for Ethereum. And a lot of people try to put it down on the fundamentals, saying that you've got these new, faster layer ones. Why do you need a slow, clunky, expensive layer one that requires layer twos to make it more efficient and everything like that? But I believe its popularity will return. I'm not a massive holder of ETH, actually. I am more invested in ETH ecosystem plays, things like Chainlink, Uniswap, some layer twos, AVAX, which is an EVM. So I believe in Ethereum as a technology, and I'm just not a massive holder of ETH, because I like to speculate on things that might give me more gains. If I'm going to speculate in layer ones, that I'm going to buy the ones that I truly believe in. And so my bigger picks are Solana and Sui for this cycle. But Ethereum as an ecosystem, you know, it's got the most devs, it's got the most TVL. It's not dying. Whatever anyone tells you, Ethereum is not dying. Look, can it be flipped in, you know, coming cycles? Or I don't think Solana will flip it this cycle at all. I think Ethereum's going to really outperform. I mean, look, if Solana was to keep going the way it was going and Ethereum was like literally dying off, I could say, yeah, that's going to happen. But I think Ethereum's getting a bounce here. It had a significant bounce. The bull market support band on the weekly is flipping green. And yeah, against the dollar pair, on its dollar pair, is looking like it's making a strong recovery. This is a bull flag here. Could quite easily see it take it back up to these highs. And then once it gets up there, you know, maybe we get a little correction and stuff before it starts challenging the highs. But I'm not expecting to go straight up. But Ethereum is the second most dominant cryptocurrency. Yeah. So if you want Bitcoin dominance to come down, which obviously then brings Altseason, which is the indicator for Altseason, then you need Ethereum to do well. And if Ethereum's outperforming Bitcoin, because it is the second most dominant, it really pulls the dominance chart down. So that's why dominance is just being kept going up. Bitcoin dominance, that is, because Ethereum's been flat. Ethereum's been dead. It's been going down, and all it's going to take is a bit of recovery on Ethereum. You know, if Ethereum does a 2x like from here, it's gonna that Bitcoin dominance is going to collapse. And here's the Ethereum against its Bitcoin pair. You know, it's come back down. You know, ETH went home, as Ben Cowan would say. It's come down to these lows again. Like, you know, it's been here 1, 2, 3, 4, 5 now. Could it come 6 before it goes up? Maybe, but I think that's a quite sharp bounce there. I think we're going to start seeing a little bit of recovery here, going up. And like I say, that actually looks a bit like it actually. If you invert that, I'll show you this. Invert scale. Oh, doesn't that look like Bitcoin dominance? It does. Look at that. Look, the 2017 drop, yeah. Then you've got the 2021 bull market. Then it comes down, and then you've got this grinding. And actually, like, you know what the funny thing is about that? So it looks like it's Bitcoin dominance when you invert it like that. But if you see the drop on this ETH Bitcoin pair, it actually looks more like Bitcoin dominance has topped more than it does actually on the Bitcoin dominance chart. Flip that back. So, like I said, Bitcoin dominance. Here we go. So it's looking like it could be getting to a top. I mean, I've drew some of these lines here. So, like, this is what I see as the trend which we want to break. Let's break that trend line here. Currently sitting around 62-63%. Then we're good. If we start seeing us breaking out of this, like around 64.5%, yeah, looking like it might go higher. And that is possible. You've always, when you're investing and trading, you can't be too too certain on things. You know, you've got to be open-minded to all possibilities. But I'd say it's cyclical that this thing tops at some point in this cycle. A crypto market cycle can't finish with Bitcoin dominance at the highs like that. Well, it can, but that would mean that altcoins were like just completely dead. There was no way that all the altcoins combined are not going to outperform Bitcoin for any period of time. But it doesn't mean that this has to come all the way back down to these lows again. I mean, look, this is ideally what we'd love. If you could get Bitcoin dominance coming back down to 39%, or 35% even, or even lower, I mean, that's like, we're all going to be making a shit ton of money. If it comes down to here, like if we could get it back down to 48%, that's still good gains. And that might indicate a lower high, because, you know, a higher low, because we had this low here around 35%, and we come up here and we did 39%. But I tell you what, I'm going to give you a little tip here about Bitcoin dominance, is because I've back tested this, and it's these sharp declines where you really want to be taking profits on your altcoins, like particularly when you start getting us to a significant low like this. As they start recovering, by the time it starts, Bitcoin dominance is recovering, that's too late. Like, a lot of altcoins have already pulled back on majority of their gains. So, like, don't be trying to call the bottom on Bitcoin dominance. As it's tanking, take profits, like, on a regular basis. Yeah, that's what I'm planning to do. So if we can start seeing Bitcoin dominance start breaking here, it might take till, look, mid-June, if that was to be the case, because, you'd say that your time limit might be here on this meeting point, which is like end of June. So this is how quickly some of this stuff could be happening. I mean, don't get me wrong, it'll take months to play out, but we could start to see the signs, like, within the coming weeks. And that's what I'm starting to get a bit excited about, actually. And then Ethereum. So Ethereum is dominating in the tokenization of assets, actually. It's well ahead of many other chains here. So, it's tokenizing a lot of assets. But I just wanted to show you that there is a lot of strength in Ethereum, because we want Ethereum to do well. Because if Ethereum does well, it brings down Bitcoin dominance, and then that just means it just symbolizes Altseason to everyone, and it just means the cash flows start rolling in. First, it'll be the institutional money, the big players' capital, and then when price goes up, that's when the new retail will come. And then just to show the general health of the crypto market as well, is so, like, this is the total value locked, like TVL in crypto. Yeah, so all altcoins, they're TVL. And it's currently at 120 billion locked in DeFi. Yeah. Stable coin market cap at 249 billion. Yeah. So with the TVL, you can see that 2021, these were the highs. Yeah, November 2021, December 2021. That was the top for TVL in crypto. That was everyone aping their money into DeFi, thinking that the cycle was going to carry on. And just piling it in, locking it up. And then like, obviously it went down to its lows. Now, what we can see since 2023, 2024, we've seen the climb of TVL, yeah? And this is higher lows, yeah? Higher highs. And you could say that's a lower high, but is it? Or is that just part of the build-up to take us to a higher high in total DeFi? And do we get a big run-up? Are we only here? Are we only here, and we've still got a lot to go? I mean, timing-wise, would say we've only got to the rest of the year, but could be going into early next year too. And then you compare that to the DEX volume as well. So the DEX volume, we saw some high spikes there, yeah? So the DEX volume has got the capability to make new highs, yeah? It got up as high as almost 45 billion, about 45 billion in DEX volume. And, it's that's earlier on in this cycle so far. And you'd expect more volume in each cycle, yeah? I mean, look, go back to 2019, 2020, it's flat. Then we start to see in 2021, 2022, and then it's gone down a bit, and then you get spikes. Each of these highs seem to create a bigger spike. So if we get TVL going higher, which follows price going higher, then obviously we get more DEX volume as well. And then we can look onto this in each individual chain. Now, this mirrors very similar on Ethereum, because Ethereum's got the most TVL. And then you can see the DEX volume. It just means it's always quite high, actually, on Ethereum. It spikes a lot up and down. But there's no reason why we couldn't see these spikes got higher, yeah, and then it went lower. It's got a bit of a higher one there, lower, and then it's got higher. Is the next one higher? Let's hope so. And then we go to Solana, and Solana, look at it. I mean, look at this TVL. That just looks like it's in a bull market. This has been a big correction. Looks like it could go higher again. And then this is just showing that the market's quite healthy. You know, you haven't had TVL just fall off a cliff, you know, like you have in bear market. So if you're trying to say, if anyone's trying to say it's a bear market, the fundamentals tell you it's not. You know, look at SUI. I mean, SUI is we could call it the darling of the cycle, the golden child of the 2024, 2025 bull market. I'm sure hopefully it will become known as that. But look at this. I mean, DEX volume, TVL, you know, that looks like it's going higher. I mean, look, it's only just recently made a new high of like, what's it, 2 point something billion TVL. You know, for a new chain, that's fantastic. So yeah, moving on. Right, here's one of my favourite subjects. Okay, so the Wall Street cheat sheet. Many people don't know how to look at it. They don't read it in the right way. They try to overlay fractals over the price, like it's going to mirror that pattern. Yeah, some of them patterns do mirror, but I think people zoom in on the wrong time frames, and you know, to say that that's us now, yeah, and then it's going to go down, they're going to create a complacency bounce, and then it's all just going to go down. It's possible, but the thing that he's not looking at, this Gordon, altcoin Gordon, is he's not looking at how these emotions fit with each part of the cycle, you know, because I've done that. You can actually go and find on my channel. Actually, I did a little YouTube video with a techno track playing. It's quite cool if you like that sort of thing. And you know, I went all the way back to, like, you know, I'm back at all the way back to 2013, 2010. Actually, done it too. I mean, it's obviously really flat there. You can see it here. I've got it all. Look, I'm not going to go through all of that right now, but you can see about the belief, thrill, euphoria, complacency, anxiety, denial, panic, capitulation, anger. You've got all of these emotions, yeah? So let's bring it up to present, yeah? Okay. So let's look at from the last euphoric market cycle top, which was 2021. Okay, so you've got euphoria. It took a long while through that summer to get to that complacency bounce, which actually made a high. Now, even though it made a new high, I'm saying it was complacency because people believed it was going to go higher and people kept aping in there at the top. Then it come down, it got to this side of the stage, it got to anxiety, you know, then it fell again and people were in denial, yeah? When it fell again, it was panic, followed quickly by capitulation. Then during all this period, people were angry. People were depressed. Then it started to rally and people were in disbelief. Then it went sideways for a long time, basically. And then when it started coming out of that sideways phase, there was hope. There was hope that the new cycle had begun. We took quite a big rally up, and in this correction, and I believe corrections mark each emotion. Like, not saying that you feel that emotion during that correction, but in the lead up to that correction, you feel that emotion. So then, after you've had hope, you're going to get into optimism. Yeah, you are going to believe that, you know, and optimism often sits around the all-time high. Yeah, you're about to break the all-time high. You're optimistic that now the cycle is going to carry on, you know, and some people are skeptical that it's going to carry on, and, you know, but then when it gets out of the all-time high and into a new area, this is where you get belief, because now you've gone past hope, you've gone past optimism. You are now in belief that this cycle is real. It's happening. It's you know, and then you get a correction. Just when everyone believes it, you get a correction. And then you get to climb out of that correction. And when you break out into another new all-time high, you are reaching the thrill stage of the market, because it's like, yeah, we're on, baby. This is going. This is happening. Yeah. And then obviously after a thrill correction, yeah. And I'm not sure whether this is a thrill correction or not. I'm not. If it is, it's going to be disappointing, because it means we'll probably get a little bit more of a leg up. Then we're going to be euphoric. But I'm not sensing euphoria anywhere near yet. I'm not even sensing thrill. I'm going to show you other indicators more in this video. And if you're liking this video, by the way, please like and subscribe to the channel. Yeah, it's a new channel. I've only been doing this. I've only done a few videos so far, but yeah, I'm looking forward to bringing you a lot more videos. So make sure you hit that subscribe button to find out more. And yeah, so I don't believe we've hit that euphoria stage yet. So, and then I've done this actually on the total free chart. Okay. And what I want to show you here with total free is total free is lagging behind Bitcoin, because if you can see with Bitcoin, we've had belief, we're about to head into frill. Yeah. But altcoins, we're just optimism yet. Like once altcoins break, now this will happen. So total free can lag behind Bitcoin on this because it will move faster. Because when you get these really explosive moves in altcoins, it happens way quicker than with Bitcoin. And you can say everything about, there's so many altcoins and, is it going to do this? But this is the total buildup of every altcoin apart from Bitcoin and ETH. Yeah. And if this goes up now past this, so we're in optimism still. We're in the optimism correction. We've not come out in the optimism correction yet because we haven't broke the all-time high for total free. And once altcoins start breaking all-time highs, then we're going to be in belief. And I'm sure after that, we will quickly get thrill and euphoria. And I'm not sure it gets up that high. Who knows where it gets to? But the other thing I like about this chart is we are sitting above this 50-week EMA. Yeah, it looks like it's holding here on the 5 and 13. Like this could get a little bounce soon, which would be showing higher lows. And this is a rising megaphone pattern as well, and which means that it hits the high, hits the top, goes higher, hits low, and we could be expecting, hopefully, to reach the top up here, or even better, break higher than that. And then that moves us over to the others chart. So the others chart looks like it's like similar with my diagonal ranges, like shown on my Bitcoin chart earlier. It's been holding this line where it just recently just dipped below it on the 14th of April, those lows. It dipped below that line, and I thought, oh no, we're going down to the lower line. And on the macro scale, it wouldn't have been too bad because it wouldn't have been a lower low there, but it would have taken us lower than these lows here, which would have been concerning. But it seems like we're holding it now. You could say we're still in a downtrend, but I believe we are just starting to reclaim some levels here. We're trying to reclaim this line here, 250 billion. And yeah, I mean, it looks like it could hold. It could hold. And then we could start to see the recovery build up. Doesn't mean we can't tap down here. Maybe we wick lower. Maybe there's a capitulation event. But this is why it's so, I mean, others, this is all the coins not in the top 10. Yeah. But the formation of it all looks like it could be fine. It's still like, that's a higher low to there. It's higher lows from the bear market. It's just showing that there's a time. There's time to catch up here. A lot of levels to break through. But it can get there. But like I say, if total free lags Bitcoin, then others lags total free, because you want to see the big caps go. Then you'll start seeing the money pouring more further down the risk curve. And then we've got the ISM. This is the ISM. So this is the Purchasing Managers Index. And what I wanted to show here is with the indicator of the Bitcoin dominance here. So the blue line is the ISM, and the red line or pink line is Bitcoin dominance. And what you can see here is when Bitcoin dominance bottoms, then that's roughly around the time that the ISM tops. The ISM is an economic chart and indicator that lots of macro investors use. It signals, if it's signaling above 50, then the market's in good health. If it's showing expansion in production and manufacturing, and if it's lower than 50, then it's showing contraction. Now it is lower than 50 at the moment, but it's been lower than 50 since 2023. Well, it's heading down, and it bottomed around 2023, and it's been doing this like bottoming out pattern. It's actually the longest bottoming out pattern it's done for many years, and I believe, going on what's going on in the world right now, that with the tariffs and everything, I believe it's suppressing it a little bit. And I believe that once we get a bit more clarity on what's going on, I believe this could start to push higher. It was starting to push higher, if you notice, until the President Trump inauguration around in January 25. So it could actually start to break above. And then if that breaks above, and then Bitcoin dominance would then head down towards it. And, you know, what's the timeline on that? I mean, it could be like later this, you know, it could take a while. Could take to the end of the year. And then we're going to look at Bitcoin dominance against this DXY, I believe. Is it? Yeah, DXY, Bitcoin dominance. Yeah. So Bitcoin dominance, one thing I found is, and I find this really interesting, is Bitcoin dominance lags DXY. So you need DXY to collapse and head down. You want a weaker dollar, and then you will start to see Bitcoin dominance. And I know you're thinking to yourself, but hang on a minute, Bitcoin dominance is all about crypto and altcoins and everything. What's that got to do with the dollar? It's about risk appetite, yeah? It's when the dollar's looking weaker, because if the dollar's strong, just hold the dollar, you know, that's what a lot of big investment capital believes, you know. But if the dollar's looking weak, then people want to start risking on into different investments. And look, you can see it tracks it pretty well here. Look, this is from 2017, yeah? So the dollar started falling first, Bitcoin dominance fell, yeah? When the dominance started to rise again, Bitcoin dominance started to rise, yeah? Dollar started to fall in 2020, yeah? And then it took a little while later, but by later on that year, the Bitcoin dominance was falling. Then you've had this climb, for the massive climb for the dollar. The dollar had such a huge run. And then maybe that's why Bitcoin dominance had such a huge run. It's taken its time to follow it. It doesn't follow, it's not a pattern watching indicator. We're not looking for directly correlated moves here. We're just looking for general trend direction over a cycle period. And the trend was up for the dollar, and the trend's been up for Bitcoin dominance. And I think only recently we've just started to see the dollar break down. Yeah, it's breaking down now. To like I think it's, what is it, at 99 now, and that, you know, when this starts falling below 98, 97, this is going to be coming down quite fast, I believe. And then, you know, you can see the signs that maybe Bitcoin dominance is topping there as well. So another positive sign there when you match it up against the DXY. And here we are with the USDT dominance, and it looks like it could be rolling over here. If you look at the EMAs and look at these lower highs, and it's, you know, we got to watch this diagonal here. I think as long as it can stay below that and start to fall, and eventually you really want to see it break down from this. I think that's a bit low, that level. Let's take it back to there. If it's 3.81%, if the dominance of the USDT falls through there, then that's another good sign that stable coins are flowing into spot crypto, or even leverage trades. And, you know, the dollar, the dominance of USDT.D is dropping. And, you know, when you are in a bull market, I remember 2021, looking at when you start off earlier on stages of the bull market, the stable coins are all sitting high up in the top 10, and then all of a sudden you start to see them dropping down the top 10 in the market cap charts. Some might even fall out of it. I mean, I think there was, what was the one, BUSD last cycle, that was up there, and then it was dropping. And yeah, generally Google Trends as well are just down. They haven't broke the highs of 2021. It got up quite high back in November, and it's just been downtrending. So we're looking for a break of trend there in the search trends, but that means we are still very early when it comes to crypto and altcoins, because mass retail are not searching it at the moment. When they will search it, if you notice, when did they search it last time? Oh, they searched it when price was going up significantly, or here when it was like all-time highs. These were when people were searching crypto. I mean, look, crypto here, the red line. I mean, that was May 2021 was when it went silly, and other than that, it would been flat. So all of those times where people were making gains in the crypto market, the search terms were very low. They were just climbing ever so slowly. But there was lots of people in the market here, like, savvy crypto investors who were long crypto, and their spot bags were filled nice and early. And they're the guys that were making a lot of money. And that's where we are now. If you're filling up your spot bags now, if you're brave enough to, take, go balls deep into crypto and know what you're doing, now's the time to be prepared to make a lot of money in the coming months, over the next year. YouTube subscribers telling us similar story. Yeah, we saw some spikes up here, but nothing like what we saw in 2021, and it looks like they might be recovering ever so slowly. It might have bottomed out, you could say, yeah, because we've had a break of trend. It went down, went completely flat for literally that whole month or two, and then we started to see some interest again coming back. So fingers crossed that's what we're seeing. And this is the altcoin season index. So if you can see, it's still Bitcoin season, obviously. It feels like it too. And not many coins have been outperforming Bitcoin. Bitcoin here, you've had like Hype, Pepe, Monero, Bitenza, Fetch, Aave, is that World Liberty Coin there? WLD? I'm not sure that one. ETH and Sui. And over the last 90 days are the only coins that have outperformed Bitcoin. Now, if I zoom this out, I could show you that if you had been buying altcoins there, and there, you'd have made a lot of money. And look where we are now. We are here. I was buying altcoins here. I was buying altcoins here. And it's done well at those times. No, I didn't take loads of profits because I believe the cycle still has lots to run. So yeah. And a couple of things I want to mention as well is so we've gone through a few points here today about alt season. Yeah. So dominance doesn't end at cycle highs. Yeah. It would mean altcoins are completely finished, and altcoins are not finished. Yeah. They've got so much good going on for them fundamentally. And it's human nature to take on more risk. So as people make money from investments, or as people see other people making money from investment, they want to take on more risk. So there's that to come. It's cyclical for both bull markets in both stocks and for crypto, for capital to flow further down the risk curve. We've not seen a mania phase or euphoric conditions, which attracts fresh new retail investor FOMO. It's important to understand what euphoric retail FOMO environments look like. Yeah, so things like friends and family asking you how to buy crypto, huge growth on socials, like you see crypto X pages like popping off, and YouTube views going through the roof. I just showed you the YouTube views on the Into the Cryptoverse indicator there, chart there. And like lots of crypto TikTok stuff flowing about. I will say we was starting to see signs of that around the elections when you had all the meme coins going on and stuff like that. But this was just like a lot of that was existing capital that were in crypto, and then you had some TikTokers getting some young kids coming in buying, not young, just young kids, but you get young people majority. That's what I saw from the TikTok videos. TikTok generally is a younger person's social media platform. And Google searches would go up. You see crypto in the mainstream news. Like I say, we saw little tastes. We have seen tastes of this. So if you were around back in November and you haven't experienced a market cycle top like 2021 or 2017, then what I would say to you is imagine what you saw in like November of December of 2024 and times that by 10, and that's like more like what a mania phase is like. People generally tend to stop talking about like macroeconomics becomes the last thing that most would look at, and fundamental crypto news and new coin launches, and that all becomes key, like a key focus, and new tech coins and new meme coins and like massive hype around it. That's generally what you tend to see at tops. And it's completely dead from that at the moment. And some people can look at that as a worrying sign and make them go, this ain't playing out. Maybe I should just sell all my bags now. You know what? When you feel sick and you feel like, you should be selling, it's probably the time you should be buying. Yeah. Because markets tend to go from the bottom left to the top right over time. And if you've got the right time horizon, or if you understand where you are cyclically as well from that, you should know that lows are where you buy, not where you sell, and get fudded out of your bags because they're not pumping. The patient investor is always the one that's most rewarded. And it's also especially important to understand. Yeah, we are not waiting for retail to come pump us. Yeah, we will see positive price action first, as that's what attracts the retail. They come to the party because their friends tell them about it. They tend to arrive early. They tend not to arrive early, sorry. But the experienced investors know that the party is going to get out of hand. They know the end of the night is near and to end it on a high. The intelligent investor will wake up for breakfast the next day, smiling and laughing at what a great party it was. The fresh newbie retail will still be left at the party, at the after party, in fact, scratching around for the dregs, around for whatever's left, and they will be leaving broke, exhausted, and they'll suffer for a long time, wondering where did they go wrong. The smart ones will turn their heads to studying in the hope that next time they will be the experienced investor. But of course, many will not learn from their mistakes and will continue to repeat the same mistake in the next cycle. Or worse, they will turn to more risk, leverage trading, gambling on new meme coin launches, etc. Not all altcoins will make incredible gains. Most will go up as the rising tide rises, and all ships, but only some will provide incredible gains. You may hear people say, oh, there's 50 million different coins now, not all will pump. Well, obviously, some key factors will tell you whether your coin will be a pumper or a dumper, or simply completely underperform your expectations. If you watch a lot of YouTube, right, and you're in some layer one project, and or some crypto coin from previous cycles that literally no one's talking about. Like, I mean, it's going to struggle to outperform stuff that everyone's talking about. So I'm not saying to you to follow the hype train and all of that too much, but the hype is everything crypto. And if there's no hype and there's no community, that's the other thing. So like, have a look, and you want to make sure that there's a strong community. And I don't mean the same 20 people in a Telegram group telling you we're going to the moon, baby, and all of that. I'm talking about like, look for like, is there people developing? What is there new dApps coming? Is there TVL? Is there DEX volume? You need to be savvy about some of those things. Like, I tend to just go for a handful of like top chains that I believe in as my big investments. Like I'm mainly in Solana and Sui are my biggest bags. With like the whole ecosystems, I'm invested in you know dexes and DeFi protocols and stuff like that. And then I've got like things like Cardano and Near and Cosmos, and I've got a little handful of like they get smaller. They're smaller positions of my portfolio. So it starts with like Sui's my biggest with Sui ecosystem plays. And then you've got Solana with Solana ecosystem plays, then Cardano, then Near, then Cosmos, etc. AVAX. There's a few other outlier plays that I'm interested in as well. But you've got to know that people are going to everyone's always going to talk about the likes of Solana, Sui, Cardano, Near, AVAX, like Cosmos protocols, all of that stuff. Like because it's great tech. If it's great tech and people want to build on it, people want to use it, it's not going to go away. So yeah, and just moving on. So economics. So you've got to watch what's going on in the cycle to know how things might fare out in the coming months. And this will be some of the signs. Like if I see certain things going wrong, like maybe the Fed's, inflation's getting too high, the Fed's gonna possibly hike interest rates and stuff like that. That's what you want to keep an eye on. But at the moment, I'm trying to look for to see that certain things are going to start heading positive. I mean, just if you want to use this website as well, I recommend it. Forex Factory. It gives you, and you can filter out, by the way, on here. You can filter out to just show you the red impact issues and news stories. So, like in the coming week, this week. So, what we've got coming up. So, okay, next Wednesday, we've got CPI. Yeah, CPI numbers coming out, consumer price index, that'll be important. And then you've got the following Wednesday, you've got the federal funds rate. So Chairman Powell will be letting us know whether he's cutting or pausing. I definitely don't think he's definitely not hiking. I think the probability actually is here on Polymarket at the moment. They are indicating a no change, so that's a pause at 96.5%. Yeah, 25 basis point decrease at 2.9%. Yeah. So it's more than likely, because these polls tend to get things quite right usually. Don't get me wrong, there can always be a shocker, but it's looking like a pause, and they're looking about in July the cut, 25 basis point cut, increases to 16%. That's still low, and in September it increases to 30. So there's more probability of a cut in September. But you know what? I think they're going to get this wrong at some point, or it's going to change. So June 18th, pretty close. So a pause could be quite likely. I think as we head on further, maybe a cut is more likely. And I'll tell you the reason for that being, if you look at this website here called globalrates.com, it shows you that that there's a lot of countries are in cutting cycles. See the direction here, green, down, yeah? And then you can see the dates for 2024. So America, yeah, is in a cutting cycle, but they haven't cut since 2024. However, if you look down the list, yeah, you've got Australia, cut May 25. You've got Britain, cut May 25. Canada, cut March 25. I'm picking out some of the more important economical countries. China, yeah, cut May 25. Yeah, Europe, cut April 25. You see the trend here. The only one that's really hiked rates is Japan, because they're in a bit of bother there. So they was hiking back in January. But everyone else, just scroll down here, like most of the European banks. No, I mean, Like even when you see like hikes here, that was 23, hike 24, Russia. I mean, literally, you've got to look at Europe, Japan, China, and Britain, and Canada, and a few others. And if everyone's in a cutting cycle, that generally they follow the trend of each other, unless there's some sort of economical reason that they don't. I think, and you can hear Trump keep saying Powell's is late to cut, he's moving too slow, all of this sort of stuff, and that might be possible. And that's what's telling me if everyone's in a cutting cycle, I believe they are going to cut more. I think the main reason, which we all would probably tend to agree on, is tariffs, isn't it? It's tariffs that's probably stopping the cutting. Otherwise, they would be cutting. So if they're not cutting because they're worried about uncertainty over tariffs, and then that's the reason for not cutting, yet the rest of the world is cutting, and then when the tariff uncertainty, maybe it happens this Friday, so Trump's meant to be speaking to President Xi this Friday. If they manage to sort of trade deal out and all this uncertainty disappears, I mean, then maybe the Fed will suddenly turn around and say, no, we're going to cut. So the balance sheet of the Fed is still tightening, and there's no QE at the moment. But I mean, like I say, it sort of arcs over in these previous times and then starts moving up. But there's no signs of the Fed increasing its balance sheet at the moment. But if we could start to see a flattening out, that'd be good. Because if I could draw your attention here to like the 2017 cycle, it was pretty flat. Yeah, they weren't adding to their balance sheet during 2017. Yet you had a really strong bull market. So QE is not essential. It would be nice, but even to see this flatten out would be a good thing. And, there sometimes can be some, other tailwinds, economically. A lot of people are just looking at the US, what's going on. But, you've got what's going on in China with their property market and everything. And, there's reasons for the Chinese bank to, print like crazy. And then you've also got this, which Quinton brings up again. I quite like Quinton if you follow him on X. He brings a lot of good content out there. Japan's bond losses are at an all-time high. Japan owns 1.6 trillion in US treasuries. Japan may dump US treasuries, spiking US yields. The Fed's response would be likely more money creation to save the bond market. And that's possible. That's possible. So just always good to think about some of those outside factors when you're thinking about. You might be watching the Fed, thinking, they don't seem like they're going to do anything here. This is just going to carry on, and then just something happens like that. If it was to happen, yeah. And look, that's not necessarily a good thing for the US if you're a US citizen and all of that. And but if you're in crypto and you've got, or you've got risk assets, as soon as money creation comes, risk assets fly. And this is a good indicator here from Andreas from Real Vision. This is like a leading indicator to economic surprises to be positive. Yeah. So this is like, it shows, it tends to show risk on times. Yeah. So look, like 2022 was risk off, yeah. It was leading down, yeah. So the dark line is the leading index, and the light line is, whether there could be good conditions, and you can see where it climbs up and it leads, yeah. And look where it's doing now. It's leading. It's saying we've got positive market conditions to come. So I just thought I'd chuck that one in there. Obviously, I don't know the ins and outs of this indicator, but it looks good, and yeah. And then, you've got the property market as well. I mean, the US property market, it's the house pricing index is still going up. It's gone a little bit flat for a couple of months. But if I show you, but it's nowhere near like rolling over like it was in 2007 to 2008, which means the housing market cycle continues at the moment. And if the US housing market's going on like that, most of the world is as well, like the UK and Australia and everything. And then we get into this the housing sector index. See how it's rode along this trend line, yeah, for well since 2008, 2009. Dips below it, showing bit of contraction in the housing market. And it looks like it's heading down to that line now, but this could be a higher low. It could go higher, but I'm not too bothered about whether. I'm in two minds. You got people saying that the housing market will top in 2026, and then that would leave a further year and a half possibly um, for the stock market to top, because as they say the stock market can top 12 to 18 months after the real estate market tops. But I'm actually seeing that this could be a top, yeah, for the housing sector, and then that can break down, and then that would mean we've got 12 to 18 months left of the cycle of stocks and everything. But I think we've only really got till the end of the year. But either way, if this bounces now and it goes to new highs, it's going to take the markets up with it as well, and then maybe we've got another cycle after that. But let's see. But yeah, I think that's about it for today's show. I hope you've enjoyed it. Don't forget to click like and subscribe and follow me for more content coming up. So I hope you got a lot from this. I'm basically showing you the cycle is not over. The speculation is still to come. The new retail is still to come. And Bitcoin dominance does not finish cycles at the highs, which means there would be a speculative time to come. So, and I hope you got a lot from, some of that party theory I was saying about, the new retail will be late to the party and the early investors go home and get an early night and wake up happy in the morning that they're not stuck at the after party with losing all their money. I hope you've enjoyed this one, and I'll catch you on the next one. Goodbye.